Every empire believes it is different. Every superpower believes it has escaped the gravity of history. But history has no favorites. It only has patterns. Patterns that repeat with such precision that they feel engineered. Patterns that have swallowed kingdoms, republics, monarchies, democracies, any system that dared to believe it stood above consequence. Rome believed it. The Ottomans believed it. Britain believed it. And today, America believes it too. But here is the truth hidden behind every period of dominance, every age of prosperity, every moment where a nation thinks it has reached the peak of its strength. Collapse is never an event. It is a sequence, a slow-motion process that unfolds in stages, predictable, measurable, and brutally consistent. Because empires do not fall when they are weak. They fall at the height of their confidence. And that is what brings us here. The United States is not in decline because it is poor, or weak, or irrelevant. It is in decline because it has entered stage 5 of the same 7-stage pattern that ended every global empire before it. The same pattern that toppled the Dutch Republic. The same pattern that ended Britain's century of dominance. The same pattern that fractured the USSR from within. 7 stages, 7 steps from ascendancy to collapse. 7 markers that emerge every single time, without exception. And today, America has crossed the threshold into the most dangerous phase of all. But before we can see how this pattern is unfolding right now, in the economy, in the financial system, in geopolitics, in the social fabric, we need to do something every collapsing empire refuses to do. We must rewind, not to the crisis, not to the wars, not to the fall, but to the beginning of the pattern, the birth of a cycle that has shaped world power for over 500 years, because no empire collapses on its own. It is pulled down by forces it created: wealth, debt, military reach, political fragmentation, currency expansion, institutional decay. Collapse is self-inflicted, and once the sequence begins, nothing can stop it. This is the part people forget. Stage 1 begins with foundation. A nation discovers an advantage: geography, trade, technology, finance. Wealth begins to flow. Institutions strengthen. Confidence rises. The world takes notice. Stage 2 is acceleration. Trade expands. Currency strengthens. The nation becomes the center of global exchange. This is where Portugal, the Dutch Republic, and early Britain first felt the intoxicating pull of empire. Stage 3 is dominance. The world's reserve currency emerges. Foreign nations store their wealth in the empire's money. Its bonds become global collateral. Its navy or military ensures trade routes stay open. Its financial markets become the safest place on earth. This is the Golden Age. The era every nation remembers as the good times. The era every politician promises to reclaim. But stage 3 always gives way to stage 4. And this is the turning point empires never see. Stage 4 is overextension. The empire becomes addicted to its status. Government spending explodes. Debt accumulates. Military commitments multiply. The currency is weaponized. Domestic inequality widens. Institutions harden. The system becomes too complex to reform. This is the stage where the cracks appear, quietly, invisibly, slowly. And then comes stage 5, the point of no return, the stage America is in today. Stage 5 is the loss of trust. Trust in currency, trust in leadership, trust in institutions, trust in the future. People feel it before they can explain it. Investors sense it before they admit it. Governments deny it until it is too late. Foreign nations diversify away from the empire's currency. Internal political battles become existential. Debt spirals become mathematically irreversible. Financial markets become dependent on intervention. The military strains under commitments it can no longer sustain. This is the beginning of the end, not in a single catastrophic moment, but through a series of quiet fractures. And then the final 2 stages emerge. Stage 6, crisis, a financial collapse, a geopolitical shock, a currency break, a social fracture. One catalyst triggers the next, and the empire enters a period of rapid unraveling. Stage 7, replacement. A new power rises. A new currency takes the mantle. The old empire fades, not necessarily into extinction, but into irrelevance. This is the 7-stage collapse pattern, the pattern that rules over the rise and fall of global power, the pattern written into the DNA of every empire from Spain to Britain to America. And here is the twist no one wants to hear. America did not avoid the pattern, it simply arrived late. The warning signs are not theoretical. They are measurable, quantifiable, happening right now. Record deficits, unsustainable debt, political fragmentation, financial consolidation, currency overreach, military overstretch, declining global trust, dependency on central bank intervention. These are not random events. They are symptoms of stage 5. And while most people believe collapse is a dramatic explosion, instant, loud, unmistakable, the truth is the opposite. Empires rot from within long before they fall from without. The process is already underway. The only question now is how far along the sequence America has moved and how close the world is to the trigger point that shifts stage 5 into stage 6. To understand that, we need to rewind to the first empire to complete the pattern in the modern era, the Dutch Republic. Because the moment we trace the cycle from its origin, a disturbing truth emerges. The United States is following the pattern with near-perfect precision. To see how the pattern begins, we have to go back to the first modern empire that followed it step by step. A nation small in size yet colossal in influence. A republic that dominated global trade long before Britain or America ever touched the mantle of reserve currency power. The Dutch Republic in the early 1600s. Amsterdam was the center of the world, a nation with no king, no vast land empire, no demographic advantage, and yet it reshaped global commerce. But how? Not with armies, not with colonies, not with raw materials, but with finance. This is the part people forget. The Dutch built the world's first truly modern financial system, the first central bank-like institution, the first global bond market, the first state-backed trading corporation capable of projecting influence across oceans. And the most important innovation, the first stable reserve currency, the guilder. Merchants across Europe stored their wealth in Dutch money, not because of its metal content, but because of the trust the Dutch had engineered into their financial architecture. And that is where the pattern begins. Stage 1. Foundation. The Dutch built a financial system more efficient than anyone else's. Stage 2. Acceleration. Trade exploded. Profits soared. The Dutch Navy ruled the seas. Stage 3. Dominance. The guilder became the world's preferred currency. Amsterdam became the global clearinghouse. But dominance always plants the seeds of overreach. By the late 1600s, the Dutch Republic had entered stage 4. Wars with England and France drained the treasury. Debt mounted. Military spending ballooned. Competitors adapted. The guilder's supremacy began to crack. Foreign investors sensed the shift. Confidence declined. And once trust erodes, the fall becomes unavoidable. The Dutch Republic entered stage 5. The loss of trust. Their bonds weakened. Their currency wavered. Their political structure fractured. And then came stage 6, a crisis triggered by war, by debt, and by the arrival of a younger, more aggressive empire, Britain. The British Empire did not rise because the Dutch collapsed. The Dutch collapsed because Britain rose stronger, faster, and more unified. This is the recurring pattern of empire transition, and it brings us to the next arc of the cycle. Britain's rise followed the Dutch script almost perfectly. In the 1700s, Britain built what the Dutch had pioneered, but bigger, the world's most sophisticated bond market, a powerful central bank, the Bank of England, a navy that could project force anywhere on Earth, and a currency, the pound sterling, that became the backbone of global trade. By the 1800s, Britain was the world's financial empire. London was the center of clearing. British debt was the world's collateral. The pound was the world's unit of trust. And like the Dutch, Britain believed its position was permanent, but no position is. Growing wealth fueled growing commitments. Industrial revolutions fueled global expansion. Wars demanded endless financing. Empire demanded endless resources. Britain entered stage 4 of the collapse pattern. Overextension, debt surged, colonial commitments multiplied. Competitors, Germany and the United States, industrialized rapidly. The world's economic gravity shifted. And then came the fracture, World War I, a conflict Britain could not fund alone, a conflict that forced the pound off gold, a conflict that revealed the limits of British power. The empire had entered stage 5, the loss of trust. The pound weakened, London's dominance faded. The world turned toward a new rising power, America. The United States did not rise because Britain fell. Britain fell because the United States rose. This is the pattern. This is how empire transitions work. One nation grows beyond the capacity of the old empire, and trust migrates quietly, gradually, inevitably. The US dollar began its ascent during World War I, accelerated during World War II, and was codified at Bretton Woods in 1944, but the rise followed the same steps the Dutch and British had taken. Stage 1. America's foundation: unmatched geography, unmatched industry, unmatched stability. Stage 2. Acceleration: explosive trade, manufacturing dominance, capital inflows. Stage 3. Dominance: the dollar becomes the world's reserve currency. But foundation, acceleration, and dominance are only half the pattern. The other half is decline. And decline always begins with the same trigger: overextension. The Dutch overextended through war. Britain overextended through empire. America overextended through global military presence, financial liabilities, entitlement promises, and decades of deficit spending. This is where the early crack lines form. This is where the pattern turns dark. This is where the arc begins to bend downward. America, like the Dutch and the British, entered Stage 4 long ago. The warning signs were visible for anyone willing to look. A military stretched across 80 countries. A government running deficits in boom times. A financial system dependent on ultra-low interest rates. A global currency propped up by geopolitical leverage. Not fiscal discipline, but overextension is only the precursor. The real danger is Stage 5, the loss of trust. The moment foreign investors quietly diversify. The moment allies explore alternatives. The moment domestic confidence fractures. The Dutch experienced it. Britain experienced it. And now, America is experiencing it too. The cycle does not change. Only the actors do. And now, as the world shifts around us, the question is no longer whether the United States is following the pattern. It is how far along the pattern it has already moved. To answer that, we need to examine the case studies that reveal Stage 5 with brutal clarity: the Dutch decline, the British unraveling, the Soviet fracture, the Japanese stagnation, because when we place these collapses side by side, an alarming truth emerges. America is not entering Stage 5. It has been in Stage 5 for years. To understand why America is now in Stage 5, we need to examine the nations that reached this point before, because Stage 5 doesn't appear through opinions, or politics, or ideology. It appears through patterns, patterns that show up every time a global power crosses the same threshold. And when these historical collapses are placed side by side, a disturbing alignment appears. The Dutch, the British, the Soviet Union, Japan's economic empire, and finally, the early signs within the United States itself. Each collapse different in form, but identical in structure. Case Study 1. The Dutch Republic, the world's first modern collapse. The Dutch Republic didn't fall because it was weak. It fell because it became too powerful too fast. By the late 1600s, the Dutch had the world's most advanced financial markets, bond markets, central clearing, a proto-central bank, and a global trading corporation more powerful than many governments. But power attracts pressure, and pressure exposes fragility. The Dutch decline followed the sequence with eerie precision. Stage 4. Overextension. Wars with England and France began draining the treasury. The Dutch had built their empire on efficiency, but their rivals caught up. Naval supremacy slipped. Trade routes became contested. Debt grew faster than revenues. Stage 5. Trust erosion. Investors quietly reduced Dutch bond holdings. Foreign merchants diversified away from the guilder. Confidence cracked before the collapse became visible. Then came the trigger, a geopolitical conflict. The Dutch were forced into a crisis they could no longer afford. Stage 6 hit instantly. Currency plunge, debt panic, loss of trade dominance. The world moved on. An empire that once ruled the seas became dependent on the very nations it once overshadowed. The lesson: collapse begins when the world stops believing your story. And this is the same place America finds itself today. Case Study 2. The British Empire. The pound's inevitable decline. Britain became the dominant empire of the 18th and 19th centuries for one reason: it mastered the Dutch system and then expanded it. British finance eclipsed Dutch finance. British naval power eclipsed Dutch naval power. British global influence dwarfed all competitors. For a century, the pound sterling was the world's reserve currency, backing global trade and global confidence. But like the Dutch, Britain entered Stage 4, overextension. Industrial expansion required constant capital. Colonial rule demanded global military presence. Wars on multiple continents required endless borrowing. The pound became stretched across an empire too large to sustain. Then came the breaking point: World War I. The war didn't just weaken the British military, It shattered the financial architecture that supported the pound. Stage 5. Global trust cracked. The pound left the gold standard. Britain became dependent on American loans. Its colonies began exploring autonomy. Its naval dominance declined. By the time World War II arrived, the pattern was irreversible. Britain didn't collapse suddenly. It collapsed structurally, silently, gradually, inevitable. The world shifted from the pound to the dollar almost without debate. And this is the part people forget. No reserve currency has ever regained dominance after entering Stage 5. Not once. Case Study 3. The Soviet Union, a superpower that looked strong until the moment it wasn't. The Soviet Union presents another angle of Stage 5, not financial overextension, but institutional decay. While the USSR was not a reserve currency empire, it followed the collapse pattern almost exactly. Stage 1-3, rapid growth, industrial expansion, military dominance, strategic geopolitical leverage. But by the 1970s, the system began slipping into Stage 4. Overextension, Afghanistan war, massive subsidies to satellite states, stagnant industrial output, rising debt and deficits across the Soviet bloc. Then, like all empires at Stage 5, the USSR entered trust erosion, not from international markets, but internally. Citizens no longer trusted the leadership. Republics no longer trusted Moscow. The military no longer trusted the government's strategic direction. The bureaucracy no longer believed in reform. And once trust breaks inside an empire, collapse is instant. In 1991, the Soviet Union disappeared in 24 hours, not because it was defeated, but because its internal trust collapsed faster than its institutions could respond. The warning for America. Stage 5 doesn't always start with markets, it can start with society. Case Study 4. Japan, 1989. A financial empire that imploded quietly. Japan never ruled the world militarily, but financially. Japan was an empire in all but name. By the 1980s, Japan had the world's largest stock market, the world's fastest growing economy, the world's most powerful corporations, and a currency that many believed would replace the dollar. But Japan entered Stage 4. Overextension, massive asset bubbles, overvalued real estate, corporate over-leverage, speculative mania. Then came Stage 5, the loss of trust. International investors realized Japanese asset prices were built on debt, not productivity. Confidence evaporated. The Nikkei collapsed from 39,000 to 7,000. Real estate collapsed by 90%. Japan entered a 30-year stagnation from which it has never recovered. Japan didn't fall because of war or revolution. It fell because the financial engine seized. The warning for America is stark. You can be wealthy and still collapse if your economy becomes dependent on debt-funded illusions. Case Study 5. Early signals inside the United States. And now we arrive at the most uncomfortable part of the pattern. The United States is not at the beginning of the cycle, nor is it in the middle. Based on every historical parallel, America is in the exact place the Dutch, British, Soviets, and Japanese were before their declines accelerated. Stage 5. The erosion of trust. Foreign trust declining in U.S. Treasury bonds, domestic trust fracturing across political lines, global trust wavering in the dollar's neutrality, market trust dependent on Federal Reserve intervention, institutional trust weakened by polarization and dysfunction. These are not random problems. They are the exact indicators that preceded every major empire's transition into Stage 6. The pattern is already visible. The trigger has not yet arrived, but patterns do not need a timeline. They only need conditions. And America now shares the same conditions every collapsing empire once did. If the collapse pattern were just history, it would be harmless. A story about distant nations, long-dead leaders, and currencies no one uses anymore. But the pattern is not history. It is present tense. It is happening right now. It is unfolding inside the United States with a precision that is impossible to ignore. Because Stage 5, the erosion of trust, does not begin with disaster. It begins quietly, silently, mathematically, and the signs are everywhere. 1. The debt spiral, the engine of Stage 5. Every empire expands its spending during its rise, but Stage 5 begins when spending becomes structurally unfixable. And this is where America now stands. The U.S. national debt did not grow gradually. It accelerated. $1 trillion in 1981, $5 trillion in 2001, $10 trillion in 2008, $20 trillion in 2017, $34 trillion in 2024. No empire in history has ever reversed a debt curve with that slope. Not one. And this is the part people forget. Debt is not the problem. The inability to stop accumulating it is the problem. When a nation cannot slow its borrowing in good times, the pattern is already locked in. America has entered the same debt reflex the Dutch had in the 1690s, the British had in the 1910s, and the Japanese had in the 1980s. Debt becomes not a tool, but a dependency. The trigger of decline is no longer a crisis. It is the simple math of compounding interest. Once interest payments exceed essential government functions, trust breaks. Foreign holders pull back. Domestic investors demand higher yields. The currency begins an invisible descent, and that descent has already started. 2. The dollar's slow erosion. The reserve currency cracks for 80 years. The US dollar has been the world's anchor. The currency oil is priced in. The currency nations save in. The currency trade is settled in. But reserve currency status is not a birthright. It is an agreement, a contract of trust between one nation and the world. And the world is quietly renegotiating that contract. In the last decade, China reduced its treasury holdings by nearly $1 trillion. Saudi Arabia signed a yuan-based oil deal with Beijing. Brazil and India settled trade in local currencies. Russia, after sanctions, exited the dollar system entirely. Central banks globally shifted from dollars to gold at the fastest pace since 1950. This is stage 5. Not panic, not collapse, but diversification. A silent vote of no confidence. Because here is the truth. Reserve currencies don't die in explosions. They die in substitutions. One transaction at a time. One bilateral trade agreement at a time. One central bank gold purchase at a time. The world isn't rejecting the dollar. It's hedging against it. The same way the world hedged against the Dutch guilder. The same way the world hedged against the British pound. The pattern is identical. The trajectory is the same. And the US is repeating it, point for point. 3. The military overstretch, the stage 4. Burden now turning into stage 5. Risk America maintains military presence in more than 80 countries, funds security guarantees for dozens of allies, and runs defense budgets larger than the next 10 nations combined. This is what dominance looks like in stage 3. But it becomes a liability in stage 5, not because the military is weak, but because commitments exceed capacity. This is the same overreach that burdened Britain in the 19th century, the same overreach that drained the Soviet Union in the 1980s, the same overreach that crushed every global empire at the tipping point. Stage 5 begins when an empire's commitments cannot shrink, even when the resources to support them do. America is trapped in this bind now. Closing bases is politically impossible. Cutting defense spending is strategically impossible. Funding the commitments is mathematically impossible. And the gap between what America promises and what it can sustain is widening. This is where trust fractures, not only abroad, but at home. 4. Internal polarization. The domestic version of Stage 5 empires do not fall simply because of external threats. More often, they fall because of internal fractures. And this is where the US ice pattern becomes unmistakable. Political polarization at levels not seen since the 1860s. Institutional distrust at record highs. Elections viewed not as transfers of power, but as existential battles. Media ecosystems that operate as parallel realities. Legislative paralysis so severe that even basic governance becomes impossible. This is not normal disagreement. This is Stage 5 fragmentation. The same fragmentation that paralyzed late Rome. The same fragmentation that fractured the Soviet Union. The same fragmentation that weakened Britain between the wars. When citizens no longer share a common narrative, they no longer share a common future, and the collapse pattern accelerates. 5. Market dependency, the final symptom of Stage 5. Perhaps the clearest sign of the U.S. entering Stage 5 is not political or military, it is financial. The U.S. financial system no longer functions independently. It is now dependent on continuous Federal Reserve intervention. Crashes are halted by liquidity injections. Recessions are softened by rate cuts. Bank failures are contained by emergency lending facilities. Asset bubbles are inflated by quantitative easing. Markets move not on fundamentals, but on policy expectations. This is not capitalism. This is dependency. A system that requires constant support is not stable. It is fragile. And here is the pattern. Every empire in Stage 5 becomes addicted to stimulus. Every empire in Stage 5 loses the ability to correct itself. Every empire in Stage 5 drifts toward crisis. America is no exception. 6. The convergence. All indicators point to the same stage: debt at unsustainable levels, currency trust eroding, foreign diversification accelerating, domestic polarization deepening, military commitments overextended, financial markets dependent on intervention. This is not a random coincidence. This is the 7-stage pattern aligning perfectly. The United States is not guessing where it stands. It is revealing where it stands. The numbers say it. The history confirms it. The global shift proves it. America is in stage 5, and once an empire enters stage 5, the pattern always tightens, cracks widen, trust weakens, pressure builds, until the trigger arrives. The Dutch had their trigger. Britain had its trigger. The Soviets had theirs. Japan had one as well. The United States will too. The only question now is what form the trigger will take, and how quickly stage 5 will turn into stage 6. History moves in cycles, but cycles don't repeat at the same speed. They tighten, they compress, they accelerate. Rome had centuries. The Ottomans had centuries. The British had generations. The Soviets had decades. The United States has years. Because unlike every empire that collapsed before it, America faces a new variable, a force no historical empire ever had to confront: global real-time connectivity, instant capital movement, weaponized information flows, algorithmic trading, interlocked supply chains, digital currencies, and debt levels so large they amplify every shock. This is the acceleration phase, the point where stage 5 doesn't just continue, it speeds up. Not because of politics, not because of leadership, but because the world itself has changed. 1. Technology compresses collapse timelines. In the past, financial cracks took years to spread. A currency panic needed weeks. A bank run needed lines outside branches. A bond crisis needed messy diplomatic cables and gold shipments across oceans. Today, billions can move in milliseconds. Markets react in microseconds. Social sentiment shifts in minutes. A rumor becomes a crisis before governments have time to craft a statement. This is the acceleration effect. Signals that once took months to travel the world now take seconds. Confidence that once eroded slowly now evaporates instantly. Fear that once spread through newspapers now spreads through screens. And nothing collapses an empire faster than a collapse in trust, especially when trust can vanish at the speed of light. 2. The global dollar system is now a single point of failure. The US dollar's strength is also its vulnerability. Never before in history has the entire global economy relied on a single currency for trade, for commodities, for reserves, for collateral, for debt markets, for settlement. But a structure that concentrated is fragile. It creates non-linear dynamics. When pressure hits one part of the system, the entire system absorbs the shock. This is the part people miss. When the Dutch guilder collapsed, the damage was regional. When the British pound fell, the damage was imperial. But when the dollar cracks, the damage is planetary. Global trade, global banking, global supply chains, global corporate debt, global derivative markets, all denominated in the same unit of trust. And the moment confidence in that unit slips even slightly, the entire structure starts to wobble. The next collapse won't be slow. It will be synchronized. 3. Derivatives and leverage multiply the speed of failure. In the Dutch era, leverage meant ships funded by loans. In the British era, it meant colonial bonds. In the Soviet era, it meant state debt hidden in ministries. Today, it means a $600 trillion derivatives web, a financial ecosystem so large that it dwarfs global GDP, and so interconnected that no one fully understands where the weak points are. Derivatives amplify small shocks into systemic failures. A 1% currency move can become a 20% liquidity crunch. A minor bond sell-off can become a global margin call. A routine policy error can become a multi-continent financial seizure. This is the acceleration force that did not exist in past collapses. Empires once fell because of debt. Now they fall because leverage accelerates the consequences of debt. 4. Political fragmentation removes the ability to correct course. Every empire entering stage 5 attempts reforms. Some fail. Most fail. But America faces a unique constraint. Polarization prevents even basic stabilization. In the 1980s, the U.S. could execute painful but necessary corrections under Volcker, rate hikes to 20%, deep recessions, brutal but stabilizing. Today, no such correction is politically survivable. Raise rates too high, markets collapse. Cut spending, political suicide. Raise taxes, economic contraction. Cut entitlements, social unrest. And for the first time in its history, the U.S. cannot pass structural reforms because no political coalition is strong enough to support them. This is the acceleration phase of political decay. Gridlock speeds decline. Fragmentation multiplies risk. Governing coalitions collapse before they can respond. When an empire cannot reform, the pattern overtakes it. 5. Demographic shift removes the cushion of time. Every collapsing empire had one advantage: population growth. A young population generates productivity. Productivity generates taxes. Taxes buy time. But America, like every late-stage empire, is aging, slowing birth rates, shrinking workforce, rising entitlement burdens, soaring health costs. This is the demographic trap: more dependence, fewer producers, higher deficits. Japan hit this trap in the 1990s and never escaped. The U.S. is hitting it now at a far more dangerous stage, in the middle of global debt saturation. And demographics don't reverse quickly. They accelerate slowly. Then all at once. 6. The multipolar shift creates external acceleration in the Dutch era. Britain was the rising rival. In the British era, America was the rising rival. In the Soviet era, the U.S. was the rising rival. Today, the U.S. faces not one rising challenger, but 3: China, India, a fragmented but coordinated global south. These nations no longer fear the dollar. They fear dependency on it, so they diversify. They restructure trade. They create alternative payment systems. They build non-dollar energy networks. They expand gold reserves. They form new blocks. This is external acceleration, the pressure that speeds the decline from stage 5 into stage 6. Empires always fall when their rivals no longer need them. And for the first time in 80 years, the world is building systems that do not require American leadership. 7. The final acceleration: social fracture meets financial instability. Every empire ends when internal fractures collide with external pressure. The Dutch: financial panic meets naval defeat. The British: war fatigue meets fiscal insolvency. The Soviets: economic stagnation meets political fragmentation. Japan: financial shock meets demographic decline. America now faces all four simultaneously: debt shock, currency diversification, political fragmentation, demographic contraction, geopolitical pressure, financial instability, technological acceleration. No empire in history has faced this many convergence points at once. This is why the U.S. collapse pattern won't follow the slow arcs of Rome or Britain. It will follow the rapid arc of the Soviet Union, a system that looked stable until it suddenly wasn't, a structure that appeared unbreakable until pressure exposed how fragile its foundation had become. This is the acceleration phase, the stage where the pattern tightens, the stage where the empire runs out of time. Because history doesn't wait, debt doesn't pause, markets don't forgive. And once trust slips, the fall is immediate. The Dutch learned it, the British learned it, the Soviets learned it, Japan learned it, and the United States is learning it now. The only question left is simple: when stage 6 arrives, what will trigger it? Empires do not collapse because of a single event. They collapse because every event begins to matter at the same time. The Dutch learned this when a minor naval defeat triggered a financial avalanche. The British learned this when a temporary suspension of gold convertibility became a permanent loss of trust. The Soviets learned this when one failed reform exposed an entire system that had already hollowed out from within. Japan learned this when a small monetary tightening shattered the illusion of eternal growth. And America will learn it too, because stage 6, crisis, is never a surprise. It is only treated as one. The signs are visible long before the shock arrives. Debt curves that no longer slope, they accelerate. Currencies that no longer reassure, they fluctuate. Institutions that no longer stabilize, they react. Governments that no longer plan, they improvise. Societies that no longer unite, they fracture. The pattern does not hide itself, it announces itself. The only people who fail to see it are those who believe their era is exempt from history. But history does not hand out exemptions. And stage 6 has a simple rule: what cannot continue will not continue. The United States is now in a position that every collapsing empire once reached, the point where pressures stack faster than solutions, where commitments exceed capacity, where trust erodes faster than it can be rebuilt, and where every attempt to stabilize creates new instability. This is how Stage 5 transitions into Stage 6, not with a catastrophic explosion, but with a series of accelerations that leave no room to breathe. Every empire encounters this moment. The moment where the math stops working, where interest consumes revenue, where obligations devour budgets, where alliances demand action that resources cannot sustain, where markets demand reassurance that policies cannot provide, and then the trigger arrives. Not because it is dramatic, but because the system has become so rigid that any shock, large or small, fractures it. For the Dutch, it was a naval war. For the British, it was gold outflows. For the Soviets, it was political fragmentation. For Japan, it was asset deflation. For the United States, the trigger could come from anywhere: a credit downgrade, a bond auction failure, a geopolitical miscalculation, a domestic political crisis, a liquidity freeze in global dollar markets, a regional conflict that escalates beyond planning, a technological disruption that markets aren't prepared to price, a silent loss of confidence among the very creditors the U.S. depends on. History doesn't prescribe the trigger. It only guarantees that one will emerge, because once an empire enters stage 5, the only question left is timing, not direction, not probability, only timing. And timing compresses as the pattern tightens. In stage 4, a shock is manageable. In stage 5, a shock becomes a catalyst. In stage 6, a shock becomes the collapse. The Dutch had warning signs for decades, yet the fall took only months. Britain had warning signs for decades, yet the pound lost global trust in a single generation. The Soviets had warning signs for decades, yet the system disintegrated in a single year. Japan had warning signs for decades, yet the economic winter lasted 30. America has had warning signs for decades, and now the pattern is entering its final phase. Because once stage 5 takes hold, an empire's fate no longer belongs to policymakers. It belongs to mathematics, to demographics, to geopolitics, to markets, to confidence, to forces far larger than any president, central banker, or institution. This is where the cycle becomes inevitable. Every empire eventually reaches the point where more money cannot buy trust, where more military power cannot secure influence, where more political promises cannot restore unity. And when that moment arrives, the empire does not negotiate with history, it yields to it. Stage 6 is not chaos. It is convergence, the moment when decades of pressure align into a single trajectory. And the final stage follows immediately after. Stage 7, replacement. The Dutch were replaced by Britain. Britain was replaced by America. The Soviets were replaced by a US-led global order. Japan's financial empire was replaced by the American tech finance ecosystem. And America will be replaced too, not necessarily by a single nation, but by a new arrangement of global power. Multipolar, fragmented, restructured around new financial anchors, driven not by dominance but by diversification. This is not catastrophe, it is transition. The same transition that has happened every time power concentrated too heavily in the hands of one empire for too long. Empires end, systems shift, world orders rebalance, and there is nothing abnormal about that. What is abnormal is believing it won't happen again, because the 7-stage collapse pattern has never failed. Not once. Not in 500 years of global economic history, not across continents, not across political systems, not across currencies, cultures, or ideologies. And the United States, despite its strength, its innovation, its scale, is not an exception. It is simply the latest participant in a cycle far older than the Republic itself. A cycle that begins with genius, matures into dominance, decays into overreach, fragments under pressure, and ends when trust breaks. This is not prophecy. This is pattern. This is mathematics. This is history. And history does not repeat. It accelerates. America is not at the end, but it is no longer at the beginning. It stands exactly where the Dutch once stood, where Britain once stood, where Japan once stood, where the Soviets once stood. Stage 5. And from here, only 2 stages remain. Crisis, replacement. This is the pattern, and we're already in it.